Officials and the court. Michelle from FIIG Securities joining us. Just in terms of this story, obviously it doesn't look great. It looks like Argentina could be forced to try and pay the coupons on these bonds there. You know, the deadline again for this, what, another month away?
Yeah, that's right, Brady. Good morning. Look, this really relates back to the last time Argentina defaulted, which was back in 2001. So at that time, the majority of holders of their bonds agreed to take on exchange bonds, whose value was at a significant discount to what they were holding. So they essentially took a cut. But a group of hedge funds decided they'd hold the bonds and they'd fight Argentina through the courts. That's been happening over the last few years, and the courts decided that Argentina was obliged to pay the hedge fund holders of the original bonds before being able to pay distributions to the new exchange bond holders. Argentina's obviously not happy about that, so negotiations continue. So not a huge surprise here. It has been, you know, we were certainly aware of it leading up to this date. Negotiations have been taking place, and I think the market believes that at some point they will get to that point. So it's not an issue of inability to pay, just a bit of legal wrangling.
Does it have any impact on global markets?
Look, I think because it wasn't much of a surprise, not particularly. You know, Argentina has been sitting on that triple C minus rating just prior to the default. If anything, we've had a little bit of volatility in bond prices as Argentina sat down at the negotiating table to look at an outcome for this issue.
Just turning to obviously the big events of the night and the moves for treasuries, it was quite interesting, wasn't it, seeing that sell-off in bonds and big moves in those yields, biggest in one-day moves in something like, certainly since November last year for the 10-year. Just take us through the reaction in markets.
Yeah, so we got that very, very strong growth figure, GDP figure, and that was a very strong rebound from the last figure we got, which was a contraction in US growth. So very, very positive. It just adds to this, tapering program that the US is still implementing, where they've cut back by another $10 billion of asset purchases. So we're down to $25 billion a month and heading towards the end of that program. And I think what most investors are looking now at is that underlying data. Unemployment's starting to look quite strong. That was noted in the FOMC statement, and now you've got that sort of strong figure coming through as well. So it sort of just ticks off another box in the US economic story as they transition from stimulus program to a more active market.
We've got to leave it there. Thank you so much as always for your analysis.